Welcome to Invest Northern Ireland's COVID-19 response webinar series.
Good morning, everyone. So today we're going to look at the job retention scheme. And for anybody who was on the previous webinar that we did, don't worry too much, because I am going to look at some of the basic points in relation to the scheme in principle. But more importantly, I'm going to look at all the updates since our last session on this. And in particular, I'm going to look at the portal, or rather the government gateway, which has now opened. So 4 things broadly that I'm going to look at today. I'm going to look at give an overview of the job retention scheme and eligibility. We're going to look at some key business concerns that we know you, like many other businesses in Northern Ireland, are facing. We're going to look at the how-to of furloughing workers in relation to the scheme. And as more guidance becomes clear, then the scheme itself becomes a lot more crystallized in a sense. And then we're going to give a very quick summary of the various updates that have come through in the last week to 10 days. And we're going to finish with quite an extended Q&A session, as Rodney has said. A lot of you have sent in certain questions in relation to furloughing, in relation to the scheme, and now in relation to the portal. And we're going to seek to deal with all those questions as they arise as we run through this. So it is important always to bear in mind that we're going back to some of the basics in relation to the job retention scheme. So I'm going to spend a couple of minutes now looking at the scheme overview and eligibility. So let's start with the overview. Let's bear in mind this is a temporary scheme. It is a grant. It is not a loan. So in one sense, it is free government money, but like any free government money, we need to make sure that we're aware of the detail, who can apply, how it applies, and when we can realistically expect monies to be recovered from HMRC. But in principle, it is a scheme which would encourage employers to retain employees as opposed to considering redundancies or layoff. Now we're going to look at eligibility, business eligibility laterally. So let's not worry too much about that, and let's certainly not get confused by the Irish scheme, the ROI scheme, which is much more invasive in terms of business scrutiny. That is not a feature of this scheme, albeit that HMRC does reserve a number of checks and balances in relation to this scheme, which all employers need to be aware of, and we'll come to those. It's a scheme which is available for all UK organisations, that is employers, charities, etc., with employees on PAYE, and that's critical. When you get into the portal and you begin to answer the questions, you will see that this is all conditional on the individuals, whether it's employees, casual workers, 0-hour contract workers, or even consultants in certain circumstances. As long as they're on the PAYE payroll system that you have been running, so HMRC can recognise the individuals, there is scope for you to unlock this scheme. And the scheme itself, when the Chancellor first announced it on the 18th, 19th of March, he indicated that claims could be backdated to the 1st of March in certain circumstances, and that it would run for 3 months. Now that has just been extended by at least 1 more month, so we know that the scheme is running at least until 30th of June 2020, and possibly longer. That he's always said it might be extended, but for now it's running to the 30th of June 2020 at least. And now the portal, the HMRC portal, which everyone had known about and talked about for quite some time, it is now open. It opened yesterday. There are already a number of teething problems with it, no surprise in principle, but equally we're going to talk through some of those and see how people can best use this. So I suppose if that's how we do it now, we have to think about what can you actually claim. And it starts with 80% of wages. Wages is broadly defined, I'll come back to that, up to a cap of £2,500 per month per employee. Wages is not just gross base salary. This is why I said it's broader than that. It also includes employer national insurance contributions plus minimum auto enrollment employer pension contributions on the subsidised wage, i.e. on the reduced level, whether it's 80% of whatever the wages were, or up to the £2,500. It's the employer NICs on those and the auto enrollment pension contributions on those. It's paid gross, and we also understand that the employees must still be responsible for employee income tax, employee pension contributions, and within that, bear in mind that if there are any other contractual payments which the employee has in the past permitted to be deducted from normal pay, those will continue to roll through. So if an employee is making any other contributions to various funds or pots within the workplace, those will not be covered by furlough, but they will continue to come out of whatever monies are actually paid to the individual employees. So if they need to make certain arrangements with their bank, building society, again, they should be doing that, and they should be aware that until such time as they tell the employer to stop or to have a holiday in relation to those deductions and payments, they will continue to be made. Employers can choose to top up salary payments with the additional 20% being the 80% of wages, so the additional 20% on top, but they don't have to. Bear in mind that if they do choose to do that, then the employee will also ask the question, well, are you also adding on the additional 20% in relation to auto enrollment, pension contributions, etc. So if an employer elects to top up the salary payments, just bear in mind some of the hidden costs with that also. And then one of the latest points that the government guidance has confirmed is that when an employer recovers these monies, they must pay or must already have paid the full amount of the grant to the employee, i.e. the employer cannot hold it, cannot make any other deductions, cannot seek to claw back any other monies that the employee may owe, etc., etc. Whatever is claimed for, whatever is recovered, has to be paid to the employee. So then if we look to the next slide, again, let's just summarize what can you claim. And we can include regular wages, non-discretionary overtime, non-discretionary fees, non-discretionary commission payments, and piece rate or piecework payments. There's another box there in things not to include, which are the discretionary payments, the one-off payments, bonuses, commission payments, which are entirely discretionary, and benefits in kind. So they're not within the scheme, and they're not going to be within the scheme, so the employer needs to make an election in relation to all of those. But fundamentally, there's some confusion about what goes in and what doesn't go in, and I think, again, we'll see this in relation to annual leave. The guidance is probably clearest whenever you assume that the calculation you put into that claim should be, broadly speaking, aligned to the nature of the claim you would, or the nature of the calculation you would run for an employee who's going on annual leave. So whatever you would normally pay them for annual leave should also fall into the claim which is being put through to the HMRC Government Gateway. So if to summarize again, we have put a link in there, which is the JRS calculator. Now, as much as the Government Gateway scheme is critically important, and Government Gateway is just their new title for the portal. So when I use portal, I mean gateway, and when I mean gateway, I mean portal as well. Those terms are interchangeable. But for as much as the portal stroke gateway is important, the JRS, the Job Retention Scheme calculator, is also critically important. There are issues with that JRS calculator. It is a fairly blunt tool, but nevertheless, it is the calculator which the furloughing scheme, the JRS scheme, anticipates that employers will use. And if there are any difficulties with that calculator, those are to be drawn out directly with the HMRC, as opposed to the employer bashing through its own figures and hoping for the best. So it would be worthwhile spending some time within the JRS calculator first, working with your figures to get those satisfied before you go into the Government Gateway, because one of the other issues with the Gateway is that once you start the application process, you at this stage certainly have 3 days to conclude that application, otherwise it effectively times out and you start again. So especially at the start, it opened at 5:30 yesterday morning. A number of employers were complaining that the system was crashing. Others found that the system worked perfectly well all the way through, but certainly it's like everything. Whenever you get the confirmation that your application has been lodged, whether or not it's successful or not, make sure you keep a full record of that as we run through so that we can track this back in due course. But some things still need a bit of clarity. Care needs to be taken in relation to holiday pay, maternity, sick pay, pensions, and salary sacrifice. Holiday pay in particular is one of those ones that the government latterly gave some clarity on, or some guidance rather. It hasn't been particularly useful. It appears in the employee guidance. It doesn't yet appear in the employer guidance, but the distilling it down, where we get to is this: holiday pay, again, should be calculated by reference to the various rates of pay which the employee would get in the normalized market without furloughing. We don't worry about 80% of that at all. We just calculate what we would. The employee should receive 100% of their normal pay. So if they have elected to take some annual leave within a furlough period, for the days that they're on annual leave, they should be paid 100%. Even if the employer is only going to be able to recoup 80% of that through the HMRC portal. So there will still be a small cost which the employer will bear for employees who are furloughed and who take annual leave. Maternity pay, for example, if an employee is currently on maternity pay and their period of maternity pay runs entirely through the furloughing period, they do not change status. They stay categorized as on maternity leave. They receive maternity pay, contractual, statutory, whatever that may look like, and they run through that period. It only becomes relevant if, for example, someone on maternity finishes the maternity pay because their MAT B1 form would have confirmed that as of, for the sake of argument, 20th of April, they would have returned to work. So they cease to be in maternity come the 21st of April. Then if the employer is furloughing, they can go into the furlough scheme for the next period. But, and we'll see this later, the employer still has to write to that individual and must get their consent to change their status from normal employee returning to work to furloughed employee. And that's another piece to this, which is clear from the latest government guidance, is that employee consent is now extremely important. That creates a real difficulty for employers, especially those in the hospitality services industry, whenever they're effectively told to shut down in an overnight. And most employees immediately dispersed. So we didn't get express written consent in the normalized sense, and many people would have said, well, look, let's get the best we can in terms of implied consent plus emails. Well, actually, the guidance now is saying the employer must do everything it possibly can to get express written consent. Whether that's retrospective or not, and whether that will work or not, is up to HMRC to assess. But of course, the HMRC are also telling us that you have to keep these records for 5 years. So they will retrospectively investigate. So it is incumbent on the employer to do everything they possibly can to manage that. Employees who have variable rates of pay, that was something we talked about before, and that's fairly settled now. It's there on the slide. Where an employee's wages are variable, the employer can use one of two methodologies. One, use the appropriate reference period from the previous calendar year, if that works, or they can use the average monthly earnings in the entirety of the 2019-2020 tax year. So the employer has an option to do by reference to last year's figures. And if there was, for example, a seasonal spike in March or April, which was unusual and is not going to be replicated this year by definition, but given the nature of the market we're currently in, then you can go back and use a monthly average for the whole of the last year via the P60 and that information, and that is permitted. So if that is the what you can claim, then we have to look briefly at how to claim. And this is the big piece, I suppose. We now know that the government gateway, or the portal, opened yesterday. The link to it is there. I'm sure you're all very aware of that, and you're probably in process of making applications. Some key information will be required, and it's good to collate this information before you get into the weeds of doing the process. PAYE scheme reference number and the UTR, the unique taxpayer reference and company registration. You will need to confirm UK bank account details on that. Some employers were concerned that if they were outside the jurisdiction or headquartered outside the jurisdiction, would they somehow be debarred? The answer to that is no. As long as you're known to the PAYE system and HMRC, and as long as you have a UK bank account through which the funds are normally paid, then it will be fine. Then we need to go into the total number of employees being furloughed and the dates the employees have been furloughed to and from. Now, some employers will say, well, what happens if I have furloughed in batches and we have 2 or 3 time periods? Well, what we would say at this point is go in effectively from 1st of March if anyone has sought to retrospectively furlough employees to the 1st of March. Probably very few. Certainly the majority have gone in and around Easter. Just in and around the 6th of April was the big surge in people going into furlough. So in that regard, do the month of April, if you like. There may be, for those who furloughed later in April, obviously there's going to be a very low return at this point, but it will normalise in May and June going forward. What you don't do is try to put in a number of different periods in your furlough application, because the system it's not sophisticated enough yet to accept that. Just go in, for the sake of argument, for the whole month of April and talk about the total number of employees furloughed within that period. And then when you do the individual employees applications within that, that's when you differentiate. The name, national insurance number for each furloughed employee is important, and you can see now why I said HMRC are putting in their own checks and balances, because they are concerned about what they term ghost employees or ghost applications, whenever some employers will seek to be opportunistic with this scheme. And as a consequence, while the government did move the entry date, PAYE date, from 28th of Feb to the 19th of March, they're not going to move beyond that. So it seems that that's a very binary distinction now. You're either in the scheme or you're not in the scheme, by reference to the 19th of March date and the RTI information you've previously supplied. I know there are a couple of questions in that. We'll deal with those later. But certainly you've got to have all this information collated and ready to go when you begin to make the application. If you're claiming on behalf of more than 100 employees, you will need to provide the claim amount and period per employee. Again, this is going to be a degree of suck it and see when you go through the application process. There will be teething problems. They will need to be ironed out. April will be a time for probably only the most straightforward payments. May is when you will see some of the more sophisticated or complex issues being addressed and recouped. So as employers, we need to make sure that our own finances are still in place and our cash reserves are sufficient to make up any shortfall in payroll, and whilst we wait for recoupment at the end of May for this in principle. Reimbursements, again, in principle, will be processed within 6 working days. So we expect to see some payments made by the end of April, which will be really helpful for most of us. I've put in red at the bottom the declaration. This is critically important. We're now seeing some of the teeth that the HMRC are putting into this, and they are saying that at the end of the process, the employer must make a declaration, and that declaration is that the claim is true, etc., but also that it is in accordance with the HMRC published guidance. And why that is so important is a lot of employers are falling into the trap of seeing the furlough scheme, the government gateway, or the JRS with blinkers on, and not remembering that one of the things which the Chancellor said right at outset, which is that this scheme is there to assist employers who are very significantly impacted by coronavirus. And it is not really to be used for any other purposes. And moreover, normal principles of employment law have not fallen away, i.e. everything we would normally do in relation to selection, everything we would normally do in relation to openness, integrity, business accounts, etc., are all in play. There will be employer obligations in this, and the employer must abide by those throughout. So if we have to retain these papers for 5 years, and if HMRC are giving themselves the ability to come back and check, we've got to be sure that we can stand over every decision we make in this, because ultimately it's the employers taking the risk that we will pay out 80% out in payroll, up to 2.5, and if we choose to pay more than that, we do. The employee doesn't take any risk. They're either eligible and they get their money, or they're not eligible and they don't get their money. But what I'm saying is they don't get their money from the employer anymore, because the employer has already paid out for March, for April, and probably will do for May. But if the employer has not followed the rules properly, the employer will take the hit, because they have paid out whenever they're in breach of the rules, or they have misapplied the rules through no malice at all. But the employer's already paid out. Are you really going to recoup that from your employees in a difficult time? That's going to be exceptionally difficult. And because of that, this is also a new slide. We need to consider the whole business eligibility piece. I know some people are asking questions about this. This is but those questions broadly are carryover from the Irish scheme. This is not a means tested scheme. The guidance states, and I've said it out there, if you cannot maintain your current workforce because your operations have been severely affected by coronavirus, you can furlough employees. Keywords there: severely affected and can. You don't have to furlough anyone. You're not obliged to furlough anyone, but you can choose to furlough if your business has been severely affected. People have said, does that mean a 25% downturn in turnover or profitability? No, that again is the Irish scheme. Most employers have been severely affected by coronavirus and the impact that it's had. So most employers can furlough. It's not so tight as we're otherwise considering redundancies now. It has been loosened to a degree. So this remains a very generous and very positive scheme. But guidance also goes on to say, however, all employers are eligible to claim under the scheme, and the government recognises different businesses will face different impacts from coronavirus. So some of us will still be able to produce widgets, or would have, but our stock levels are falling because our suppliers can no longer give us the constituent parts we need to put into whatever our product is. Hence, we will be impacted in different ways. So there are a number of elements within that, but fundamentally this remains a very positive scheme. Eligibility generally, if we move on to what's slide 11 now, businesses must have started a PAYE payroll scheme on or before the 19th of March and have a UK bank account. We know that. Claims can only be made for those employed via PAYE. So that covers, initially it only covered full-time, part-time employees. Then it was extended to cover agency workers, 0-hour contract workers, casual workers. So it's very, very broad. Does it cover the consultants, the LIMB workers? Yes, it can, but it only if those workers have been on the PAYE system on or by the 19th of March 2020. For a consultant who's truly an independent consultant, who may well provide services to a business but has not been paid through the PAYE system, then no, they're not in this. They have to recover through the self-employed assessment process instead. And an employer should not fall into the trap of doing the humane thing and trying to put employees in, or trying to put consultants in whenever we fall outside these rules, because if you do, and HMRC doesn't pay out, or does pay out but subsequently seeks to recoup in the next 5 years, then it is the employer that is taking the financial hit in making these payments. And actually, in the case of consultants or self-employed individuals, may have misdirected those individuals by seeking to do what seems to be the right thing and seeking to make a claim on their behalf, but actually it just impacts employer payroll. It involves an investigation in the next few years, and actually you've misdirected some of the individuals from some of the right kind of resources that they can unlock. So the last point in that slide that I want to draw your attention to, and I've put it in red, the employee must have been notified to HMRC through RTI submission on or before 19th March. Now, if an employee has started with us prior to the 19th of March, but they're not in there in RTI, they will not get into the furlough scheme. That is black and white, and that is what the scheme currently says. That may seem harsh, but it is the reality. And actually, the employer needs to ask itself why an employee was recruited post 28th of Feb and have not been already updated or put into the system in RTI. The fact that the business may have been working from home, or and most of its employees were out as a consequence of coronavirus, is probably not a good enough answer, because there's been so much media attention on this. So again, that may well be a grey area for employees who have started work with an employer in good faith. The employer has not updated RTI on or before the 19th of March, therefore they cannot be furloughed. So normal principles of employment law don't fall away. There's an employer obligation and potential liability there, which needs to be worked through. Everything will depend on what you have said and done with that member of staff, what the contract says, etc., etc. i.e. normal principles of employment law have not fallen away. So you need to answer that in the round of all the comms. So last slide in eligibility then is just dealing with the employees hired after the 19th of March. That date was originally the 28th of February. It's been moved by the government to the 19th of March, and anybody after that brought in cannot be furloughed. Where does that leave them? If it leaves them back in the unusual position that maybe seeking to go back to the previous employer, asked to be rehired and then furloughed. That doesn't work in for a whole lot of reasons. So it may only apply in very, very small number of circumstances. Query, why would an employer rehire someone? They may have left on bad terms. They may have left under a compromise agreement, so may have received other monies in any event. They may have been made redundant on a statutory basis. So do you seek to recoup a statutory redundancy or an ex gratia payment just to rehire someone? If you rehire someone for the purposes of furloughing, a couple of real problems with that. What do you do with continuity of service? What do you do if you as a business are not otherwise furloughing anyone? So you're making a furlough application for one or two individuals who are no longer your employee in any event. You no longer owe them a duty of care. So the government scheme can allow you to rehire, but it is fraught, I think is probably the easiest way to do it, with difficulty. And even if you drafted up some form of employee consent and some determination in the fact that I know that I'm only in this scheme for as long as the business wishes to furlough, or for as long as the government keeps the furlough scheme open, and then whenever the furlough closes, my employment terminates again, well, that's fine now. Employees will sign up to anything now to get into the furlough scheme if they're in this category. But what happens in 2 or 3 months' time whenever the scheme finishes and the role that they'd maybe wanted to go to no longer exists because that business doesn't have the funds or the finances to bring in a new employee? So this person is now out of work. Do they then come back to you and say, well, look, I know what I signed 3 months ago, but actually I don't have a job to go to and I've been rehired at continuity of service, so I'd actually quite like to stay now? And we'll say, well, hang on a minute, you signed an agreement that says you're going to go. Yeah, but that was heat of the moment, and normal principles of employment law don't fall away. Normal principles of contract law will not fall away, and consequently, an employer that rehires someone, notwithstanding what may be written, may find themselves in some real difficulty at the end of this if the employee does not have another job to go to. So a real cautious one. Keep an eye on that, and just be, be advised that there are not an awful lot of risks with the rehiring piece. Another critically important piece to furlough: when on furlough, an employee cannot undertake work for on behalf of the organisation, the original employer. We're hearing stories of some employers that are telling employees, yes, I will furlough you, but rest assured you're still going to be working. I'm going to still expect you to do certain things working from home or even coming on to site. That is going to be, well, let's be clear with that. That is unlawful. That will be a breach of the furlough scheme. And if anyone does that or requires that to happen, then they're potentially defrauding the system. And the latest guidance on HMRC, as produced, actually puts in a whole section on employee whistleblowing for fraudulent use and abuse of the furloughing scheme, or member of the public. So a third party, knowing this, can flag to HMRC that this is an abuse of the system. So there are very small categories of work that can be carried out and performed. Watch the government guidance. Most of that is in relation to study leave. Some of it is in relation to the very, very basics in terms of passing on information that has come in, emails, etc. if you're furloughed, so that those who are retained can keep the business ticking over. Query directors' duties. Some of those are vague because they're basically 7 statutory director duties that must be complied with, even if a director is furloughed, and they can be. How do they comply with their statutory duties? So there is more guidance on directors coming out, and basically the advice must be for all employers: be very, very cautious about what you do or what you ask any employee stroke director to do whilst on furlough leave, because it may jeopardize the ability to continue to benefit from this scheme. Minimum length of time an employee can be furloughed is 3 weeks. People, a lot of questions are focusing on this 3-week piece. Do we have to furlough in 3-week cycles only? No, you can furlough effectively for until the scheme ends, which may be 2 months, 3 months, 4 months, but it has to be no less than 3 weeks. So that also permits furloughing an employee for 3 weeks. If business picks up after a 3-week period, bring them back in to do 2, 3, 4 days work, and then you can furlough again. But each period of furlough must be for no less than 3 weeks. If it's less than 3 weeks, that's a commercial call by the business, because the employee will no longer be eligible for furlough within the government scheme. So you lose the ability to recover any monies from the government as a consequence. That's the purpose of the 3-week cycle.